Welcome to the Deep Dive, your shortcut to being genuinely well-informed. We take a stack of sources, articles, research, company profiles, recent earnings reports, and really distill the most important insights, giving you those aha moments.
Exactly.
Today, we're taking a deep dive into a company so embedded in our daily lives that, well, we rarely even think about it. Mastercard.
Yeah.
We're going on a fascinating journey behind the scenes of this global giant.
And our mission for this deep dive really is to move beyond just the surface level. We want to truly understand Mastercard's evolution from its surprising origins,
Right.
its core operations, its current financial health, and maybe most importantly, how it's not just adapting to, but actually shaping the very future of payments. Our goal is to equip you with that knowledge quickly, thoroughly, and, hopefully with plenty of insights you might not have considered before.
Okay, let's unpack this.
Yeah.
So when you hear MasterCard, you probably picture a credit or debit card.
Yeah.
But here's the surprising bit. It didn't even start as a single unified company. Back in 1966, it was founded as the Interbank Card Association, or ICA.
Right, the ICA.
This was essentially an alliance of banks, big names like Wells Fargo, United California Bank, Crocker National Bank. They all kind of got together.
Yeah, and their primary goal was pretty straightforward, really. They wanted to create a strong payment network that could properly compete with Bank Americard.
Which is Visa now, basically.
Exactly, which you probably recognize today as Visa, a huge force even back then. And they moved incredibly fast. Get this. Within their very first year, they brought on 150 member banks.
Wow, 150 in the first year.
Yeah, it was a pretty impressive show of collective power,
That's really rapid expansion. And their branding evolution is kind of fascinating, too. In 1969, they brought out Mastercharge, Interbank card.
With the logo.
Yeah, complete with that iconic logo we still recognize, those overlapping orange and yellow circles. But it wasn't until 1979 that they officially switched to Mastercard, a name change that really reflected their growing global ambitions.
Absolutely. And that global ambition, it really culminated in a pivotal transformation in 2006. Mastercard's IPO, the initial public offering on the New York Stock Exchange, ticker MA.
The IPO. That's always a big step.
Oh, huge. This is a monumental shift. I mean, think about it. Moving from being owned by its member banks to becoming a publicly traded company. That unlocked just unprecedented access to capital.
Right, money for growth.
Exactly. And that capital wasn't just, pocketed. It was strategically plowed back into innovation, into technology, and into really aggressive global expansion. It fundamentally reshaped their business model and, well, it fueled the growth we've seen since.
You can definitely see the results of that ambition today. MasterCard, headquartered up in Purchase, New York, it's now a genuinely global powerhouse. 33,400 employees, operations in over 210 countries and territories, and their cards. Accepted by over 37 million businesses worldwide. That's just a massive footprint.
It really is. And its core purpose, I think, is captured quite well in its mission statement. Connecting, empowering an inclusive digital economy that benefits everyone, everywhere, by making transactions safe, simple, smart, and accessible.
Okay, let's break that down a bit. Safe.
Safe, yeah. Do you mean serious investment in security and AI? I mean, in 2024 alone, their measures apparently prevented something like $35 billion in fraud losses.
$35 billion, wow.
Yeah. Simple focuses on seamless, user-friendly stuff, contactless, digital wallets, that kind of thing.
Makes sense.
Smart is all about using data analytics and AI for insights, for personalization, and accessible really highlights their commitment to financial inclusion, reaching people who, historically haven't had access to traditional banking. They even have a platform called Community Pass specifically for this, and they set this really ambitious goal. Bring 1 billion people and 50 million small businesses, MSMEs, into the digital economy by 2025.
1 billion people.
Yeah.
That's huge.
It is. And what's really impressive is they've already blown past those goals. They've connected over 960 million people and 65 million MSMEs.
That's incredible. So it's really not just about moving money around, is it?
Not at all.
It sounds like it connects directly to their broader vision to create a world beyond cash that is inclusive and empowers people.
Yeah.
It feels like it's about transforming whole economies.
Exactly right. At its absolute core, Mastercard is a multinational financial services corporation. Its specialty is payment processing.
Hmm.
They provide the essential infrastructure and tech, sometimes called the payment rails,
The rails, yeah.
for electronic transactions.
Yeah.
Think of it like the secure, super fast highway that lets money move smoothly between buyers and sellers all over the world.
Okay.
Their Mastercard processing solution is billed as this next generation, fully integrated end-to-end platform. It's built for incredible efficiency, scalability. It processes over 5 billion transactions annually,
5 billion.
manages 94 million cards, operates in over 65 countries. It's truly a network of networks.
And their actual card products go way beyond just the credit and debit cards we all carry, right?
Oh, definitely.
They offer prepaid cards. Those are super popular for online shopping, travel, budgeting, often reloadable too.
Mm-hmm.
They're also heavily into digital-first virtual cards. These use APIs, application programming interfaces, basically software connectors.
Right, the tech behind it.
To simplify things like travel and business expenses, they create unique, often temporary card numbers.
Very useful.
And for businesses, they have commercial cards using embedded virtual card tech for even better efficiency and security. So I guess the question is, what does all this diversification mean for you, whether you're a consumer or a business owner?
Well, it means a couple of key things. Firstly, Mastercard isn't, putting all its eggs in one basket. This diversification reduces their reliance on any single segment and really maximizes their market reach.
Spreads the risk.
Exactly. And secondly, it lets them adapt to different needs. For instance, those virtual cards. They dramatically cut down fraud risk because your main card number is never actually exposed during the transaction.
That makes a lot of sense. And that diversification, it goes further, right, into
Yeah.
what they call digital payment solutions and value-added services, or VAS.
Yes, VAS. And this is key. It shows Mastercard is truly much more than just those payment rails we talked about.
Right.
Their digital solutions cover things like mobile wallets, contactless payments, and tokenization services. Tokenization is where your actual card number gets replaced with a unique encrypted digital token.
Ah, so the real number isn't floating around.
Precisely. It makes transactions way more secure. But VAS itself, that's become a really significant growth engine for them. Just look at Q2 2025. VAS revenue hit $2.8 billion.
$2.8 billion.
Yeah, accounting for a hefty 39% of their total net revenue, and it showed strong 16.1% year-over-year growth. This strategy really diversifies their income streams and definitely boosts their profit margins.
So VASS is clearly crucial. What are some concrete examples of these services?
Sure. Well, there are powerful AI fraud monitoring tools. They estimated these prevented almost $48 billion in fraud over the last 5 years.
48 billion. That's staggering.
Isn't it? Just think about that attempted fraud stopped cold.
Yeah.
They also offer data analytics for businesses, various buy now, pay later options.
BNPL, yeah, that's everywhere now.
Exactly. Consulting solutions for their partners, comprehensive cybersecurity and fraud prevention, and even AI integration with products like Mastercard Agent Pay and personalization through things like Mastercard One Credential.
It seems like MasterCard is definitely not just reacting to new tech. They're actively pushing into it, being proactive.
Very much so.
Take real-time payments. They offer an instant payment service and a bulk payment service for much faster global transactions.
Mm-hmm. Faster money movement.
And in cross-border payments, their Mastercard Senda platform allows near real-time person-to-person and disbursement payments worldwide. And you can see it working. Cross-border volumes jump 15% in Q2 2025.
Driven by expansion, right? Places like Southeast Asia, Latin America.
Exactly, those high-growth areas.
And you mentioned proactive. That's absolutely the word. They're also heavily invested in open banking solutions. This is potentially huge because it securely connects different financial apps and services.
So for you, the consumer.
Right. For you, it means you can share your data more easily if you choose to. This makes things like applying for loans, getting personalized financial advice, or managing budgets across different banks much smoother. And importantly, it gives you more control over your own financial information.
Okay, and then there's the really big one, the one that always grabs headlines.
Yeah.
Cryptocurrencies.
Yeah.
How is MasterCard navigating that often volatile space?
Yeah, this is where it gets really interesting, maybe even a bit controversial for some. Mastercard actually announced support for certain cryptocurrencies for payments way back in February 2021.
Okay, so they've been in it for a while.
Relatively speaking, yes. Since then, they've made some strategic moves. They partnered with Bacti in October 21 to help their member banks and merchants offer crypto services. Then with Paxos in October 22 for their crypto source program.
Hmm.
More recently, they've unveiled end-to-end capabilities specifically for stablecoin transactions. Those are cryptos pegged to traditional currencies. And they've partnered with Chainlink and Fiserv to try and accelerate mainstream stablecoin adoption.
So they're building infrastructure for it.
Exactly. What's fascinating here is how these investments really connect to the, blurring lines between the physical and virtual worlds. Mastercard isn't just sitting back waiting for perfect regulations. They're actively building bridges into this new financial frontier.
Trying to stay relevant.
Precisely. Ensuring their relevance and competitiveness as we move deeper into what people call Industry 4.0, that convergence of digital and physical tech.
Okay, now let's shift gears slightly and decode the numbers. Because MasterCard's financial health, well, it looks pretty robust right now.
It certainly does.
Their Q2 2025 earnings really seem to impress the market. Adjusted EPS came in at $4.15, which was better than estimates.
Right, beat expectations.
Net revenue hit $8.13 billion, also surpassing forecasts and showing a significant 16% year-over-year increase.
16% growth is strong.
Yeah. And adjusted net income also saw a solid jump, 12% to 13% year-over-year. Their operating margin was very healthy, too, 58.7%.
Very healthy indeed.
Purchase volume grew by 10%. Worldwide gross dollar volume up by 9%. It all looks pretty positive.
And there was one detail in the reports that really stood out, almost unbelievable, actually.
Why is that?
In some specific areas or calculations, they reported a staggering 100% gross profit margin.
100%. Seriously, how is that even possible?
I know, right? It likely pertains to a specific segment or calculation method, but think about that it's almost unheard of in basically any business. It just shows how uniquely positioned Mastercard is in certain parts of its operation. It speaks volumes about their efficiency in those areas.
Wow. Okay, 100%. That's wild. So what's the underlying reason for such strong numbers across the board?
It really points to an incredibly resilient growth model, or algorithm as some call it. It seems to be largely driven by those high-margin, cross-border transactions.
Right, payments between countries.
Exactly. And the consistently strong performance of those high-margin value-added services, the VASS we talked about. Looking at their stock performance, it reacted positively to the earnings news, hitting $570.37 pre-market, getting close to its 52-week high of around $594.
So investors liked what they heard.
Definitely. Over the past year, Mastercard's stock delivered a strong 21% return, give or take. That signals pretty robust investor confidence. The company's market cap is huge, around $522.5 billion.
That's enormous.
It is. Now, we should acknowledge it does trade at a relatively high price-to-earnings ratio, about 40.3x.
Okay, so it's considered pricey.
Well, it essentially means investors are paying a premium because they expect high future growth. Investing Pro's assessment suggested it might be slightly overvalued based on current metrics. But overall analyst sentiment, overwhelmingly bullish. We're talking 37 buy ratings, 8 holds, and only 2 sells.
That's a very strong consensus from the analysts. And what about those smart karma scores you mentioned? Growth, momentum, resilience. What do they tell us?
Great. Those scores, growth at 4, momentum at 4, and resilience at 3. On whatever scale they use, they suggest that investors are really focused on Mastercard's long-term potential for expansion and market traction.
Future growth potential.
Exactly. More so than immediate value or dividend yield, where their scores were lower, around 2, it points towards a forward-looking investment view.
Okay, that makes sense. So let's talk about the competitive landscape. Mastercard holds a major global position, second largest payment processor worldwide.
Right behind Visa.
Operates in over 200 countries. 150 currencies. They handle about 31% of global credit card transactions. Who are the main rivals keeping them on their toes?
Well, the direct and, let's face it, most formidable competitor is Visa. No surprise there. They hold the larger share, about 53% of global credit card transactions, and often operate with slightly lower interchange fees.
Okay, Visa's the big one. And can you just quickly clarify for everyone what interchange fees are?
Yeah, good question. Interchange fees are basically the small percentage of each transaction that the merchant's bank pays to the cardholder's bank. It's a fundamental part of how these card networks generate revenue, and yeah, it can definitely be a point of competition between them.
Got it. So besides Visa?
Beyond Visa, you've got American Express, or Amex. They play in a slightly different space, targeting a more premium market segment. They tend to charge higher fees but provide more exclusive benefits. And crucially, Amex operates as both the card issuer and the network. They hold about 8% market share.
Right, a different model.
And then, of course, you have the very agile, digital-first fintech companies. Think PayPal, Square now, Block, Stripe. These are major challengers. PayPal alone has over 400 million active accounts. That gives you a sense of the scale of these digital players.
That's huge. What's really fascinating, though, is what you called Mastercard's hybrid approach. It seems instead of just seeing these fintechs as pure rivals, they often collaborate. You mentioned partnerships with PayPal, Checkout.com, Stripe, focused on things like tokenization. It almost sounds like they're turning potential competitors into partners sometimes.
That's exactly it. It's a very smart strategic approach. It effectively works to expand the entire payments ecosystem rather than just fiercely competing for slices of the existing pie.
Makes the whole pie bigger.
Sort of, yeah. And as for MasterCard's own competitive strengths, they're pretty clear. That robust financial performance we discussed, a powerful global brand and market position, strong operational efficiency, and critically, those significant strategic investments in technology and partnerships.
Those are definitely compelling strengths. But, every giant faces challenges. What are the biggest vulnerabilities or headwinds you see for MasterCard, and how are they tackling them?
Well, one obvious and ongoing challenge is the constant regulatory and legal pressure. I mean, we just saw that massive $5.6 billion antitrust settlement with Visa finally upheld in March 2024.
Right, related to interchange fees again, wasn't it?
Primarily, yes. That's a huge consequence stemming from past practices, and it really underscores the kind of legal scrutiny they operate under. Then there's that 2011 lawsuit from the National ATM Council, which the U.S. Supreme Court just allowed to proceed to trial back in April 2024.
So that's still ongoing.
Still ongoing. And let's not forget the scrutiny they faced back in 2018 over reports that Google had allegedly paid for user data without a public announcement, which obviously raises privacy concerns.
Data privacy is a huge issue now.
Absolutely. And you can even see it reflected in their financial statements. They've shown an increased provision for litigation expenses.
So that's a lot of legal stuff. Is that just, the cost of doing business at that massive scale, or does it signal potentially deeper issues they need to manage?
It's probably a bit of both, honestly. But their response is absolutely key here. They're pouring billions into cybersecurity. You mentioned $10.6 billion over 5 years, preventing nearly $48 billion in fraud.
Right, that huge fraud prevention number again.
Yeah. This isn't just about ticking compliance boxes. It's fundamentally about building and maintaining trust. They're also aggressively expanding partnerships with companies across really diverse sectors, banks like BMO, tech giants like Uber, travel companies like American Airlines, even gaming with Xbox.
Diversifying your relationships.
Exactly. In their continuous innovation, that strong R&D focus on AI, quantum computing, tokenization, it all aims to build trust, demonstrate compliance, and differentiate MasterCard as a secure, reliable provider. They're actively trying to turn these potential liabilities, regulatory risk, privacy concerns into competitive strength through technology and transparency.
That R&D focus seems really forward-looking. It goes beyond just tweaking current products. They're clearly building capabilities for the next generation of financial services. What are some of those key focus areas you see?
Well, their key focus areas really span the cutting edge.
Yeah.
We're talking AI and specifically generative AI. They have things like an AI card design studio, Mastercard Agent Pay.
AI designing cards.
Yeah. They're also exploring quantum computing, looking at next-gen devices, privacy-enhancing technologies, and constantly pushing on cybersecurity. They even have a Start Path program specifically to foster security innovation from startups. It's a genuinely forward-looking strategy trying to anticipate where finance is heading.
And what would you say is perhaps their boldest strategic initiative in that vein, the most potentially disruptive one?
Oh, without a doubt. It's their announced plan to phase out the traditional 16-digit card numbers entirely by 2030.
Whoa, hang on. Phase out the 16-digit number, the number on pretty much every card in my wallet.
Exactly. Think about that for a second. The physical card number that we've all known and used for decades, gone, potentially, in less than 6 years.
That is a monumental shift. Why? What's the driving force behind that?
The why is actually pretty clear and compelling.
Yeah.
It's primarily to significantly reduce fraud by removing what is, frankly, a critical point of vulnerability, the static card number itself.
Makes sense if the number isn't there.
Right. It also dramatically improves the user experience and aligns perfectly with the accelerating move towards tokenization, which we discussed.
Replacing the number with a token.
Exactly. And also towards biometric authentication, using your fingerprint, your face, etc., to approve payments. The implications are huge. Physical cards might become much less relevant day to day. Overall, data security should improve dramatically, and it will inevitably accelerate this trend of digital-first banking.
Yeah.
This aligns perfectly with their One Credential initiative, too, which aims for a singular, secure digital identity for payments and other interactions. It's really proactive self-disruption at its finest.
So they're disrupting themselves before someone else does.
You could say that. And it could genuinely set new industry standards for payment security and convenience worldwide.
And this all ties into Mastercard's adaptation to Industry 4.0 and the future of business payments, too, doesn't it? What's their vision there?
Yeah. Their vision for business payments is quite ambitious. They talk about a fully networked payments environment. Think interoperability between systems, real-time communication, and intelligent payment choices being made automatically or semi-automatically.
Sounds very efficient.
Extremely. They even have this provocative goal, the elimination of check payments.
Get rid of checks entirely.
That seems to be the ambition. And making real-time payments the absolute standard for businesses. For corporate finance departments, this translates to real-time access to account information, much better optimized liquidity management, and more comprehensive financial forecasting. Mastercard is really positioning itself not just as a processor, but as a strategic partner for corporate financial transformation.
Moving way beyond just handling transactions.
Way beyond.
It's also really important nowadays to look at corporate social responsibility, CSR, and ESG, environmental, social governance commitments. Is this just, good PR for Mastercard? Or is it truly baked into their business?
I think the evidence suggests it's absolutely integral. Their strategy is structured around three core pillars: people, prosperity, and planet. And all of that is underpinned by what they describe as robust governance.
Okay.
And here's a key detail that really demonstrates its importance, I think. ESG performance metrics specific, measurable goals are tied directly to the annual incentive programs for both executives and regular employees.
Oh, interesting. So it affects bonuses.
Exactly. Things like hitting financial inclusion targets, achieving gender pay equity goals, reducing greenhouse gas emissions. Progress in these areas directly impacts compensation. That signals a really mature understanding that ESG isn't just philanthropy. It has a direct impact on long-term financial performance, risk management, and overall reputation.
So it's not just a side project. It's actually financially incentivized internally. Can you give us a quick highlight of their impact in some of those ESG areas?
Sure. On financial inclusion, as we mentioned, they've already surpassed those ambitious 2025 goals, connecting over 960 million people and 65 million small businesses to the digital economy. Initiatives like their Community Pass now serve 7 million users, often in remote communities, helping people like smallholder farmers in places like Kenya and Uganda.
That's tangible impact.
Definitely. On climate action, they've pledged net zero emissions by 2040. They've already achieved a 46% reduction in their operational emissions since 2016, and 100% of their own operations are powered by renewable electricity. Their Priceless Planet Coalition initiative has funded the planting of over 26 million trees. And they're pushing their supply chain, too. 71% of their top suppliers have apparently committed to science-based climate targets. This kind of commitment, it genuinely enhances their reputation, it attracts sustainability-focused investors and partners, and crucially, it can unlock new business opportunities, like in the growing field of green finance.
So as we kind of wrap up this deep dive, let's just quickly recap the dynamic challenges Mastercard is navigating. There are those ongoing regulatory and legal battles we discussed.
Antitrust, data privacy, ATM fees.
Yeah, then there's the intense, constantly evolving competition from Visa and Amex, but also those nimble fintechs.
Right, the digital challengers.
And just by being global, they have exposure to foreign currency fluctuations and risks too.
True, that's always a factor for multinationals. But if we connect this back to the bigger picture, these challenges in many ways also highlight their opportunities.
How so?
Well, Mastercard's response to the legal and privacy issues isn't just paying settlements. It's that massive investment in cybersecurity and their whole tokenization strategy. That's not just defensive, it's actively building the trust that's essential for securing future payment flows.
Turning a challenge into a differentiator.
Exactly. And their response to competition, it isn't solely about direct confrontation. It's driven by relentless innovation, that robust growth in high-margin, value-added services, the strategic partnerships that are literally reshaping the payments ecosystem, and that aggressive global expansion into high-growth emerging markets.
So the challenges push them to innovate and adapt faster.
Precisely. The largest opportunities for them really lie in those technological advancements, AI, quantum computing, stablecoins, exploring entirely new payment flows. Plus, strategic acquisitions, their continued work in financial inclusion, which effectively creates massive new markets for them, and leading that whole Industry 4.0 transformation of business payments we talked about. When you look at it all together, Mastercard's long-term strategy appears incredibly robust. They're leveraging technology to drive global digital adoption, especially in areas with huge growth potential. It positions them not just to adapt to the future of global payments, but to actively shape it.
So what we've really seen through this deep dive is Mastercard solidifying its leadership, not just through relentless innovation, but through really smart partnerships and maintaining this deep commitment to building an inclusive digital economy. They really come across as a company that's adaptive, diversified, and fiercely future-focused.
Absolutely. And perhaps as a final thought for you, our listeners, to consider, given MasterCard's really aggressive move to phase out those traditional 16-digit card numbers by 2030, embracing tokenization and biometrics instead, what does this truly mean for the future of your physical wallet?
Hmm. Good question.
Will that piece of plastic actually become a relic of the past? Maybe even faster than we currently imagine. And how might that fundamentally reshape our relationship, not just with money, but with our very identity in this increasingly digital age? Something to think about.